Good morning, everybody. My name is Emer O'Gorman. I am Director of Economic Enterprise, Tourism and Cultural Development here in Fingal County Council, and I'm delighted to welcome you all here to the 2021 launch of the Dublin Economic Monitor. This is in fact our 24th edition of the Monitor, which is produced on a quarterly basis. For those of you unfamiliar with the Dublin Economic Monitor, it is a collaboration between the 4 Dublin local authorities, and it's designed to give you up-to-date data and analysis on what is happening in the Dublin economy. We're celebrating a number of firsts here this morning. This is our first live launch since pandemic restrictions. It's the first webinar we've done, and it's our first launch in partnership with Grant Thornton and Pact House. So today highlights this new partnership between the local authorities, Grant Thornton and Pact House, which we started in the second half of last year. This new partnership sees a broadening of the data covered in the Dublin Economic Monitor to include up-to-date data on job openings, restaurant bookings and traffic, which help to give a current picture of what is happening in the Dublin economy. We've also updated the accompanying website, dublineconomy.ie, and that now includes interactive, downloadable data and more timely articles and video clips, the most recent of which we will see in a few minutes. The Dublin Economic Monitor is a really valuable resource for those doing businesses in Dublin or thinking about locating in Dublin. Timely information on the economy is essential to understanding the challenges faced by the economy. This is true now more than ever as we start to recover from COVID. The impact of the pandemic on hospitality, employment, retail and tourism in particular are evident in the data, and trends over the coming months will help us to understand how Dublin recovers. This morning, there will be a presentation on the major trends evident in this issue, looking at the Monitor from Grant Thornton, followed by a panel discussion looking at the most pertinent issues with CBRE, Indeed and staff from Dublin City Council. So to kick off this morning's proceedings is a short video with the main findings of this edition of the Dublin Economic Monitor. And thank you.
Hey everyone, I'm Jamie Cudden. I'm delighted to host the webinar this morning, and it's really great to see the stats in terms of what's happening in the economy in the video over the last couple of minutes. I'm going to introduce Andrew Webb, who's the chief economist from Grant Thornton, who hopefully can make some sense out of what's happening in the last quarter of 2020 in the Dublin economy. And just before I suppose we hand over to Andrew, we're going to, try an interactive poll and just get some feedback from, I suppose, the attendees at the webinar this morning. And if we can just put up the poll, it's looking at, I suppose, confidence in the economic outlook for the Dublin region. So if you have a second, just tick your box there in terms of how confident you are in the economic outlook for the Dublin region over the next 6 months. And hopefully, we'll have a look at some of the results and discuss some of these poll results as we go through the discussion today. So I'm going to hand over to Andrew Webb. Andrew, I'm delighted to welcome you, and it's great working with Grant Thornton in this new iteration of the economic monitor. I see some of the results coming in. 80% are moderately confident, 13% very confident. So I suppose that gives a flavour, Andrew, maybe in terms of some of the trends that you're starting to see in some of the figures. This is the 24th economic monitor. I can't believe we've been doing this for 24 quarters, but we're really excited about the new iteration of the monitor. I suppose the whole digital experience as well through dublineconomy.ie should be a real resource for everyone. So Andrew, I'll let you talk a little bit about what you're seeing in the latest quarter.
Thank you very much, Jamie, and good morning, everyone. We're delighted to be involved in this Dublin Economic Monitor, and it's a resource that I've certainly used down the years. And so we're absolutely delighted in Grant Thornton and working with Pact House to be working with the councils in developing this. It's an interesting findings there for me on that poll, and we can get into that in due course. I suppose I'm trying to look forward to being much more hopeful. So I don't think I was quite an outlier there, but I think I carry a fair bit of hope for where the economy emerges to over the next six months, 12 months and beyond. So it falls to me this morning to really get into a little bit more of the detail in the monitor and give some oversights there. I watched the video with interest because it's not often you get to see in real time and just what your job might look like when it becomes automated. So that was insightful for me and maybe gives me some impetus to continue to up my game and continue to bring value. So no pressure as I start this presentation this morning. But as I say, I want to just touch on some of the key trends that we're seeing and that we've drawn through in the monitor. I haven't gone into every single indicator in the balance of time versus detail, but I would recommend that you check dublineconomy.ie and see the new look website there. So it's a great resource to have. But just as we start to look as to where the economy is and where it's heading, this is a chart we've always been tracking closely, and it's one that, given global conditions, is exceptionally volatile. It's the global chaos index, if you like. It's the tracker of where the global socio-economic and political context is, and we get a sense from tracking this that we're moving into an era of potentially more relative calm after a number of years of absolute chaos in the global socio-political scene. We do wonder if it's a case of people being in lockdown and having less opportunity to get up to mischief, but there's certainly a calming of the seas when it comes to the general context in the last number of months. And that's really setting a scene, and we've seen the new presidential moves in America and various issues coming through there. So we're looking at a calmer global context. And what that means for where we're heading in general terms in the economy, we are taking a view that we're seeing now much more light than tunnel after an exceptionally difficult year. The economic hit, obvious to all of us, and the context we've been operating in, but just we're now starting to see some numbers come through. This is numbers from the central bank just to show the impact of where the economy has been in the last 12 months and where the bank expects it to go next. So it's modified domestic demand, which is probably the best measure we get of where the domestic economy is heading. And we can see there that the expectation is that the bounce back will take hold this year and next. Now, obviously, there's downside risks in terms of the length of time that the lockdowns continue and the rollout of the vaccine. And I suppose we're now probably wholly tied to how fast the vaccine rolls out in terms of lifting restrictions and moving the economy into a steady state, having been in a stop-go cycle for most of the last 6 months. And we see that stop-go cycle coming through in the data that we've been tracking in the monitor. So if we just turn to business developments, and we use here a whole range of indicators, but just two that I've drawn out, which are of particular interest at the moment, given the conversations that are happening around the future of the office space. The chart on the right there just shows office vacancy rates and just shows those ticking up. We have noticed that there were lots of deals delayed at the start of lockdown, but then delay was what happened. They weren't cancelled, they were delayed for a period, and they bounced back relatively strongly in Q3. So we're seeing some activity in that space, but we're also seeing then vacancy rates ticking up. So there's a whole mix of issues going on there, and we maybe get into some of the bigger trends in that space in the panel discussion. I suppose then overall, in terms of where business is and where business feels it's heading, the IHS market PMI, I suppose, showing an unsurprising level of volatility there, but also showing, I suppose, this most recent quarter is showing us that the impact of the most recent restrictions. But I suppose if we look back a quarter or two, we see the potential and the hope that the economy can shift through the gears with relative pace and get back to strong performance. So we're drawing some hope for future performance from the spike in activity when restrictions lifted, but we're tracking carefully just to see if there are any signs of permanent scarring as these lockdowns continue. So very mixed picture, very volatile picture on business activity and the commercial office space. Well, then with look at a key driver of the economy, and that's consumer spending, and we see then using the MasterCard data, which is a really valuable real-time type resource for the Dublin economy, and we can just see the story that has emerged in the last year. And again, we probably see trends here that are of no surprise, but when we look at the likes of entertainment down 70% year on year, discretionary spend, which is clothing and that sort of spending, the opportunities to do that in a traditional sense have been very limited for 12 months. And we're seeing then that shift to e-commerce, which is up 44% over that year. Now, we have seen some recent evidence coming through that there is a move back to traditional retail and the going into town and spending in that way. But the e-commerce trend is one that has ramped up dramatically and has probably accelerated by I think some estimates say that trend has accelerated by a decade, and we don't see that reversing wholly, but we do see some move back towards traditional retail. Overall then in the year, actually, the total retail spend in Dublin from the MasterCard data was up by 1%, and I suppose that's when you balance across the spend on household goods and necessities increasing and aggregate it all through, then the overall trend was up by 1%. Moving into the hospitality sector and just to some of the indicators that we're tracking here, obviously average daily rates in hotels and the availability and supply of rooms, and understandably that has had a very difficult period. Interestingly as well, though, we have on the right open table data just to show the number of seated diners in Dublin restaurants on a Saturday night every week. We track this now every week, and we can see just that when we first came into lockdown, I suppose we were pondering, would people re-engage with confidence, and would there be challenges about people maybe being very reluctant to re-engage? What we're seeing through trackers such as restaurant bookings and people re-engaging in the economy is that when it's safe to do so and when they can be assured of that, then that there's a strong bounce back. And I suppose the longer lockdowns go on, the more appetite there is for people to emerge from that. And so it's going to be a case, hopefully, of emerging sustainably and safely. And we should then hopefully see a sustained bounce back coming through. But at the moment, understandably, no one's able to engage in hospitality and leisure to the extent that would sustain any recovery or activity. So in terms of how that shakes through into the labour market, we're carrying a message of hope mixed with some caution, and Jack's with us from Indeed, so he can get into some of the detail of these trends from Indeed. But I suppose just to say that the vacancy numbers are starting to trend back upwards, and that Dublin is lagging behind the national picture there, Dublin being the blue line, the rest of the state being the red line. And just not to dwell on that, but we can get into that again in discussion. And then obviously with where we've been in the last year, the unemployment rate has started to tick up. There have been significant supports, as we all know, to protect the employment figures and to protect jobs. And that's been very successful and necessary. But we are starting to see, as an unfortunate consequence of the stop-go cycle that the economy has been in, we're just now starting to see more of that unemployment becoming permanent. And that's a very unfortunate situation to be in, and one that needs to be watched carefully so that we can look for policy to address that. And then in terms of housing, which is, I suppose, always a key topic of conversation in any market, but particularly around the Dublin market, which has had a long narrative around housing challenges and overheating markets and so on. We thought we'd bring these slides through. So interestingly, I felt, because we were hearing a lot about how transactions would plummet and that prices would I suppose intuitively trend in the same direction, where we did see transactions obviously plummet for a while, but they've come back strongly. And I think when people can, they do, is some of the key messaging coming through from these indicators. It's when we're allowed to, and when it's safe to do so, we do engage in the economic activities that we traditionally did, and that gives us opportunity. And then in terms of property prices, yes, there's been some flattening, but certainly no strong tail off. But interestingly, and probably too early to say if this is going to be a long-term trend, we're seeing the price index continue upwards in areas outside of Dublin. And again, that gets into whole conversations around the remote working and the appetite for people to maybe move into the suburbs and potentially further afield. So, we can talk about that and get into some of the trends there and what that means for the economy. So as I said, I didn't want to go through every single indicator in the monitor. I would encourage you to read it and use the web resources that are there. But I suppose just in terms of where we're heading next in the economy, and this is still very much a guessing game, and I don't envy any forecasters because there are quite a few competing sentiments and lots of curious data at the minute showing lots of volatility. So in terms of where the sentiments are and where the key trends in that regard are, we see 4 competing sentiments at the minute, all vying to play into where the economy goes next. Obviously, there's the hope. The vaccine brings that hope, but successful rollout obviously required there. And then if that is successful, when that's successful, that will drive much more economic activity. And people are now starting to ask me, are we heading into the roaring 20s? I hope so. I believe that was a fun decade, so I look forward to that if that's the case. But in terms of those other sentiments, fragility, we are seeing lots of potential opportunity, but it's hope delayed at the moment. It's we start, but then we have to stop, and that's coming through certainly in sentiment surveys, and there's lots of volatility in that, and that's driving through into that stop-go economic performance that we have seen. And then frustration has come through in the last number of months with the various indicators that we track in terms of mood and ease of doing business, and that's, I suppose, driven by the particularly at the minute, Brexit and the outworkings of the new trading relationships with the UK, leading to some frustration, and then the issues around the protocol and how that all works through. So Brexit may be done, but certainly not dusted at this point, and there's more to work through there. But I'd end on a note of hopefully a more upbeat note, which is resilience. We came into the pandemic in decent shape. It was probably just this time, well, probably January, February last year, where the question I was being asked most was, have we reached full employment, and are we going to have major skill shortages or overheating labour market? And we've now moved very quickly into other questions, obviously. But there's a fundamental resilience within business, and that has come through in how we've seen many examples of how businesses are adapting. And we'll see just how council has adapted and innovated, and there's an article in the Monitor to that effect, and we can talk about that today too. So there's a resilience there. There's also a resilience built into people's personal savings. In aggregate, obviously not everybody has been able to save, but in aggregate, household savings ratios are significantly higher than they were, and that offers potential then for money to flow back into the economy if that's released through the release of pent-up demand. So from my perspective, that's hopefully an overview of where this monitor is heading. At that point, I'll stop and pass back to Jamie, and look forward to the rest of the session and the discussion that follows. Thank you.
That's great. Thanks very much, Andrew. Some really interesting insights there. I'm going to ask you now, Andrew, if you want to join a panel discussion. So we have about 20 minutes. We've got a great panel. I'm going to ask Marie, Jack, and Eileen if you can turn on your cameras, and then we can kick off a panel discussion. Thank you very much. So, yeah, Andrew, some really interesting trends there. I think what we've seen really is real resilience, and I suppose local government has been, at the very forefront of having to respond to maybe some of these challenges in terms of how people move in cities, how we respond to, emerging trends like outdoor eating and the challenges of an Irish climate, and some of those real issues. I'm going to hand over to Eileen Quinlivan. Eileen is Assistant Chief Executive in Dublin City Council. And one thing that maybe to flag for the Economic Monitor is we have every edition, we have a couple of articles where we have different perspectives on the Dublin economy. So Eileen, I'm going to hand over to yourself maybe to talk a little bit about, I suppose, the response from local government, and maybe you might introduce yourself as well.
Hi, I'm Eileen Quinlivan. I'm Assistant Chief Executive in Dublin City Council, and I've a responsibility as part of my brief for transformation and smart cities and digital services. And I suppose the article that I've put together is really a snapshot of the examples of innovation that have been demonstrated across the 4 local authorities in the region. It's been driven by the circumstances around COVID and having to continually respond to that uncertainty and the changing situation. And I suppose, like all sectors, the initial stages were very challenging for us. We had to maintain our range of services as much as possible. And so because of that, we had to reorganize ourselves. So things like implementing remote working very, very quickly in City Council, we would have gone from a couple of hundred people having remote access to maybe 1,500 within the first week. And then we're up at 3,500 now with remote access. So that meant we had to change how we interacted with the public and with customers as a result. And that, I think, has been the same experience for all the local authorities. We also then have, of course, frontline workers and operational staff who have to physically come into work, people who work with vulnerable groups. And so we had to reorganize how they do their work so we could maintain those essential services. So we had to reorganize teams into small pods, keep them separated, staggered shifts, and all that kind of flexibility needed to be brought in. And as I said, that was very challenging, but it's a credit to the staff and to the elected members, of course, that they showed great flexibility and support for those changes and worked with us to implement them. So we've managed to get those embedded as ways of working now for the duration of the pandemic at least, but certainly with remote working, that'll be something we'll be looking at as a longer term direction for us as well. And then in the article, I've highlighted, I suppose, 4 key areas where we've taken innovative approaches to keeping the city operating and supporting the city economy over the past year. And I suppose a lot of what's most visible has been in the public realm. So we've had to reimagine what shared space means to cater for that rapid shift in transport patterns. So, you know, we've all seen that shift to walking and cycling. So we had to rearrange street spaces to match that. So people will have seen across the villages and towns and in the city where we've put in temporary build-outs for footpath widening or temporary cycle lanes and used bollards and so on to cater for that social distancing and those shifts to walking and cycling. So that idea of temporary trialing, temporary interventions, they would be new approaches for us that I think we've implemented them and they've worked quite well and shown that we're able to respond to the changing situation. Secondly, then we've repurposed street spaces and, you know, used space for activities like outdoor dining, using parklets or to facilitate click and collect or outdoor leisure activities. So, you know, we've been flexible as local authorities in how we can facilitate street furniture and that reuse and repurposing of space so that businesses could keep operating at the various levels of restrictions. And I think some of those interventions, you know, they're testing the idea of what streets are for and the notion that, you know, like you say, we can't have this outdoor dining culture like they do in other cities, but, you know, the things that have been trialed have given everybody, you know, ourselves and the public the opportunity to rethink that maybe and see, you know, in the longer term, is this a possible way we can use streets differently? Thirdly, then I touch on the whole area of partnership and collaboration between the local authorities and the business community. I think that's an area where real true collaboration has been seen, you know, things like the Reopening the City initiative in the City Council area or the Fingal in it together. They're examples of where, you know, business councils and other partners have worked very flexibly together, have committed to doing things and have, you know, recognized each other's needs and the competing demands maybe and responded accordingly. So that's typically been around managing reopening, the mindset around shopping local and supporting more sustainable business practices. So that's a really interesting area, I think, that can be brought forward. And the fourth area then is around innovation in technology. So you have things like using drones for waste facility inspections in South Dublin or virtual consultation rooms in Dunleary. And of course, the way the local enterprise offices have pivoted their whole service range online and refocused on, you know, trading online and business continuity supports to really match where small businesses are at. They're showing, I suppose, that we've had to adapt our service delivery models, but they really show the potential of technology as a way of, you know, changing our models and delivering public services into the future. So that's just a quick overview. I think, you know, the examples I've shown there, they show all the hallmarks of innovation, you know, this rapid response, starting small, scaling up, testing and trialing, and, you know, there's real collaboration and imagination at play in it. And I suppose the challenge is how we bring that forward outside of the circumstances of a crisis.
Yeah, absolutely, Aileen. I think agile and innovative are probably not words people would have associated too much with local government, but it's clear that, you know, everyone is responding in the right way to this pandemic. And also, I mean, I've read some articles about, you know, COVID and how it's accelerated digital transformation, you know, by at least a decade across government internationally. So, you know, there's certainly some real positives, hopefully, that we can take and grab and, you know, move and expand as we kind of move back into normality. So thanks very much for that, Aileen. It's really great to see some of these initiatives. And I guess, you know, as the economy hopefully opens up again in the next couple of months, we're going to see a big improvement in the labour force and job openings. So I'm going to hand over to Jack Kennedy from Indeed, who's got a real kind of, I suppose, view of that from the inside. And maybe, Jack, your article kind of gave a really interesting perspective on that. So you might say a few words about that.
Yeah, thanks very much for having me. So I'm an economist at Indeed. We're the world's largest job site, which means that we capture large amounts of data on both the employer and job seeker sides, which gives us access to almost real-time insights and kind of gives us almost a front row seat on the labour market. So as Andrew kind of showed in the chart earlier, we have seen a bigger fall in our job postings in Dublin versus the rest of Ireland. Despite sort of steady gains over recent months, job postings in Dublin are still running about 30% below the pre-pandemic baseline. Across the rest of Ireland, the job postings gaps narrowed to just 11% below pre-crisis levels. And really that kind of underperformance that we've seen in Dublin kind of mirrors trends that we've seen across other European capital cities and large urban areas. Clearly, a key factor behind this is that levels of footfall in city centres have been much lower than usual. Large numbers of people have been working from home for many months now. Well, there's also been that collapse in tourism and business travel. The higher end, the higher skilled end of the labour market obviously has been sort of less impacted in terms of jobs that can be done remotely. Sectors important to the Dublin economy like tech, finance and law. But nonetheless, sort of high levels of uncertainty have dampened hiring even in those sectors to some extent. I think one theme that will be sort of interesting beyond the pandemic is whether some of the customer-facing jobs that really rely on that sort of spending by people travelling into city centres, permanently disappears or sort of comes back or moves somewhere else. I think certainly the move to remote work is greater and more persistent in larger cities than in other places, and could be longer lasting, and that could sort of impact spending patterns to some extent and lead to some reallocation of work in those sort of dependent local services jobs away from city centres and potentially towards suburban areas. We've also seen big jumps in remote work interest, both on the job seeker side. We've seen job seeker searches rise fivefold for remote work, and also the proportion of job postings offering remote work has quadrupled. We've seen particularly big uplifts during periods of lockdown, unsurprisingly. But interestingly, when we sort of drill into the job postings offering remote work, actually many of them are marked as only temporarily offering remote work due to COVID. Even in sort of white collar office based jobs, most of those jobs are marked as temporarily remote in the current lockdown. So that does suggest that many employers do expect workers to return to the workplace at some point, either full time or for part of the week. I think, perhaps given that job seekers are clearly still interested in remote work, if a balance between employer and job seeker wishes is struck, then certainly that post-pandemic equilibrium may settle at less work from home than in lockdown, but more than before the pandemic. So really sort of looking towards that sort of hybrid model that many companies seem to be sort of increasingly looking towards. So it certainly seems that the office isn't dead, but we may be visiting it less than we used to. And of course, once restrictions are lifted, people will still want to come in and enjoy the culture and amenities in Dublin than they did before the pandemic, which should mean many more job opportunities in the hardest hit sectors than are available at present.
Absolutely, Jack. Yeah, no, and I guess one of the, I suppose, additional things we have now in the monitor is an indicator from Indeed to kind of track, I suppose, job openings, and this is again another valuable insight that people can get a glimpse in terms of where the Dublin economy is. It's really interesting to see the variation between Dublin and national trends. Obviously, cities are being hit harder with COVID, but Jack, I think we'll continue to get your insights over the next couple of quarters, and really look forward to developing these indicators and these insights in terms of a new kind of source of information for Dublin. So thanks very much for your perspective there, Jack. I'm going to just before I introduce Marie, we're going to just look at the second poll. We've got a quick question here, if everyone can just quickly click on. In 6 months' time, maybe this will lead up nicely, Marie, to your conversation. Do you expect to be working from home full-time, a few days a week, or not at all? So just if you can have a think about where you think you might be in 6 months. And I'm going to hand over to Marie Hunt. So we're delighted, Marie, we've been collaborating with you ever since day one of the Economic Monitor, using your CBRE data, which has been a real asset to the monitor. I'm going to just maybe get yourself to do a little introduction and maybe a bit of perspective in terms of what you're hearing and how it relates to, I suppose, the real estate, commercial, retail sectors.
Thanks, Jamie. Well, I suppose working in the real estate sector, it's a very, very broad sector. So it covers everything from offices to retail, industrial, and both from an occupier perspective and equally from an investment viewpoint. And then we also would work in areas like hospitality as well. So we're seeing the full remit. And what I would say is it has affected every single sector in a very different way, mostly for the negative. But in fact, some sectors have probably benefited on the back of COVID. And I think it's fair to say that the supports that were put in by government have been hugely supportive. And I think to some degree, it's until such time as we're back, shopping again and back in the city centre, that we'll begin to really see the impact of COVID, because it's particularly in retail, it's difficult to see the carnage as yet because we don't know what stores are going to reopen or not reopen, etc. In terms of the office market, I think what we have clearly seen is that a lot of the big occupiers are putting off making big decisions at the moment, and mainly because they're unsure of what the future of the office is going to look like for them specifically. I think it's probably too early for most companies to call how much office space they're actually going to need going forward, because I think it's a case of getting everybody back first and then starting to do some research. And that will vary from one industry to another, one company to another. It really depends on the roles within that organization. But I think for most people, what we're looking at is some sort of a hybrid model where you will work at least 1 or 2 days a week from home and the rest of the time in an office environment. So I don't necessarily think we're going back to a situation where it's Monday to Friday, 9 to 5, full time in an office evermore. But equally, I don't think we're all going to work from home forevermore either. It's somewhere in the centre is where that blend is. And what that means in terms of how much space people are going to need is another question, because on the one hand, there will probably be less people in the physical office at any point in time, but the amount of space they occupy will be more because of social distancing, etc. So I think the configuration and the design of buildings is going to change, and you're probably going to see very different technologies and designs in terms of touchless technology and things that were going to happen anyway, but have been accelerated because of COVID.
Yeah, absolutely. And I think, Marie, we saw in the results of the poll, I think reinforcing your view, I think about 70% of people reckon they'll have this hybrid model, a couple of days a week working in the office. So the office definitely is not dead.
The office is not dead. And I think in addition to working in the office and working at home, there's probably room for some third place as well. Now, that third place for some people might be the local coffee shop, but for others it will be a flexible offering. So maybe they may not commute into Dublin city centre to go to their headquarters, but they might go to a satellite office or a hub somewhere else. And I think that's one to be particularly mindful of for the local authorities, not just in the Dublin region, but right throughout the country, that if you provide a hub where people can spend some of their time, they don't necessarily all have to congregate in one head office and in one particular location.
Absolutely. And maybe some of the trends we're hearing from a lot of the tech companies is they're kind of reconfiguring their spaces to be more collaborative spaces, so that when people are in it, because you still need to innovate and collaborate, I guess, in a lot of these areas, you're probably seeing that reconfiguration is really something quite big that's happening.
I think reconfiguration is going to be huge. And I think for a lot of people, particularly younger employees, they do need that collaborative time. They need creativity. They need to be trained. And you can't do that with the best will in the world. You can't do that remotely. So I think there's always going to be a place for offices, but I think the configuration will change. And I think in that respect, modern buildings probably have an advantage because most of them have been designed in that way and that they can be quite flexible. I think the bigger challenge would be for some of the older buildings, particularly the Georgian stock in Dublin, which doesn't really lend itself to that sort of reconfiguration.
Yeah, absolutely. So Marie, thanks very much for that perspective. I'm going to just, I suppose, ask Andrew maybe for a comment in terms of what you've heard. I think, really this challenge for cities is something we're seeing with the market data globally, where cities are being impacted much more than national economies, and we have this argument also with balanced regional development, and not everything should be in Dublin. Yet over the next couple of years, it's imperative that Dublin recovers at full strength from the whole COVID challenge. I don't know, Andrew, what your perspectives are on that in terms of how to take the opportunity of balanced regional development, but also make sure that the city is performing to its full ability.
There's quite a few in there that required lots of opportunity to think and I suppose ponder where we go, and we're reading more and more about the 15-minute city and everything being on doorsteps and accessible. I suppose I see the whole regional growth piece, and I think there's lots of conversation about regional hubs, and that's all to be worked through, and there are opportunities there for people to maybe have that hybrid of home working, hub working, and then headquarters working, if you like. I think for Dublin and the local economies, there's opportunity in the recovery and resilience type mood music coming out of the EU, which is really going to start pushing towards green and digital, and there's big opportunities for the city in grasping that. Retrofitting some of those Georgian type buildings, or pushing towards net carbon neutral and beyond, and then also it really enhancing the digital piece. How we ensure Dublin comes back, I mean, I suppose it's a business capital, but it's also a retail and cultural capital, and it's about maybe providing and convincing that it's safe, accessible, and vibrant, and that's going to require a little bit of thought around streetscape and public realm, and how the city is used and how we move around it. So there's lots of reinvention opportunity there too. But we're seeing where things have been pedestrianized, that there's opportunity and activity that flows from it. So it's in the context of the office isn't dead, I would equally say the city isn't dead. There's lots of opportunity to re-engineer itself and emerge stronger. And I would say the EU mood music on green and digital are two areas that offer that opportunity and should be pursued with vigor.
Absolutely. And I think maybe just reinventing, I suppose, what the city centre is about and the experience, and thinking about what that looks like post-COVID is going to be maybe an exciting opportunity for a city like Dublin, and could create, I suppose, new growth opportunities as we see maybe a decline of some of the traditional retail. I'm going to just put up the last poll before I hand over to our Chief Executive, Owen Keegan. The last poll is just looking at COVID-19 restrictions as they reduce to below level 5. How likely are you to return to Dublin City? Highly likely somewhat, or will stay local. So this will be interesting, Marie, in terms of will we get people back in? And hopefully the experience and the offering will be attractive. Hopefully people can get in easily, maybe on bike or more sustainable modes. But I mean, this is all, I think people are dying to get back into the city. So hopefully we'll see a good response to this question. Highly likely, so half. So maybe somewhat likely. So probably maybe not as strong as we might have imagined. And quite a lot of people are probably happy with, they probably got to experience local a lot more, and maybe things they never really knew existed are quite attractive. I think neighborhoods and some of the suburbs and villages in the city are really thriving on the back of COVID. So that's a positive as well. But based on that, I'm going to hand over to our Chief Executive of Dublin City Council, Owen Keegan. Owen, your camera will just take a few seconds to load up, but hopefully, Owen, you can give a bit of a perspective on what you've heard and maybe what to expect or what's in store for the next period for the Dublin economy. You're just on mute there, Owen.
Thanks very much, Jamie. I've been asked to, I suppose, to wrap up today's event. So first of all, I want to thank everybody who's logged in for joining us this morning, and I suppose for your continued support for the Monitor. I want to thank our partners, Grant Thornton and Pact House, for their work in preparing the Monitor. From our perspective, there have been significant improvements in the product, particularly in terms of the new data sets that are covered, the development of the more interactive dublineconomy.ie website, and indeed the refreshed presentation are all, I think, very positive and welcome developments. Anybody who hasn't done so already, I'd recommend that you check out the new dublineconomy.ie website. I think a huge amount of work has been done there. So I want to thank Jamie and Emer for, I suppose, introducing today's session. And I want to thank our panelists, Eileen, Marie, Jack and Andrew, for their insights on various issues that were covered. I also want to thank Juliet from our own Economic Development Unit for her input into bringing about today's event. So just a few comments from myself. I mean, it's very clear that the COVID pandemic is continuing for much longer than we'd initially expected, and it is having an adverse impact on the economy in general. But it's having a particularly adverse impact, I think, on the economy of the city centre because of the reliance on the retail, tourism and hospitality sectors. Now, I think there's no doubt with the end of the COVID restrictions, there will be an inevitable economic rebound. I think there is some uncertainty regarding the extent to which office-based employment, retail activity and tourist numbers will recover, and within what timescale they'll recover. So, I think we would have a concern that despite commercial rate waivers and other government supports, there must be a concern about the longer term viability of a significant number of businesses, and particularly small businesses that are dependent on office-based employment, tourist numbers, etc. So I suppose against this background, I think it's encouraging that the Monitor is presenting, I think, a relatively optimistic outlook for the Dublin economy. I very much hope that this is borne out, and I look forward to reading future editions to see if that optimism has been justified. So thanks very much.